Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
After listening to today's news, you'll know. First, OpenAI's chaotic video app launch fuels a debate over its synthetic data flywheel strategy and the risk of AI model collapse. We'll analyse why this built-in public doctrine is a turning point and how it affects the competitive dynamics between US and Chinese AI. Second, Sony's Concord failure triggers a massive strategy shift, cancelling multiplayer projects and doubling down on $200 million single-player blockbusters. We'll explore how this costly failure in the saturated live service market could transform PlayStation's entire product, roadmap, and business model. Third, Jeff Bezos calls the AI boom an industrial bubble, citing Mistral AI's $6 billion valuation as proof of a frenzy disconnected from fundamentals. So we'll discuss why he believes this bubble is productive, unlike the dot-com crash, and what it means for long-term infrastructure investment. Fourth, $38 billion in VC funding creates a new breed of Neoprime defense tech startups, as Anduril's $30.5 billion valuation challenges legacy giants. In this episode, we'll break down their software-first approach and what it signals for the future of AI-driven warfare and autonomous systems. Fifth, why the US has become no country for young grads, as tech entry-level hiring plunges 50% and AI tools make developers 55% faster. This discussion will reveal how this structural shift connects to degree inflation and ghost jobs, and what it means for the value of a STEM degree. Now, get this. OpenAI's new video app is already number 3 on the App Store, but you can't even get in without an invite code. And one of the first things to go viral, a deepfake of its own CEO, Sam Altman, shoplifting. This chaotic launch comes right after a $6.6 billion share sale that made OpenAI the world's most valuable private company. The viral success, however, has ignited a firestorm inside the company. A person familiar with internal strategy says leadership is torn, worried about safety, but terrified of stifling creativity and being seen as censors. However, if you zoom out, you'll see another layer of strategy at play. This isn't just a messy launch, it's a deliberate part of what some in the industry call the build-in public doctrine. The idea is to ship fast, get the technology into the hands of the public, and let society adapt. While this accelerates innovation, critics argue it's essentially beta testing a powerful reality-bending technology on all of us, raising serious questions about whether this is a responsible path or a reckless gamble for market leadership. That tension isn't new. One former employee told CNBC that OpenAI has a pattern of prioritizing fast launches over everything else. When a Chinese rival, DeepSeek, released a cheaper, faster model, OpenAI rushed out its own in a matter of weeks in what was widely viewed as a defensive move to preserve its lead. And this isn't just a simple competition. It's pointing to a fundamental split in how AI is being developed globally. For instance, OpenAI's Sora model excels at creating entire video scenes from a text description. But its Chinese rival from Alibaba, called Emo, specializes in something different, animating a single static image, like a photo or a painting, and making it talk or sing with incredible realism. What's more, Chinese models like DeepSeek often have built-in censorship of politically sensitive topics, reflecting a different set of governmental controls. We're literally watching two different philosophies of AI, one more open but closed source, the other more state-aligned but sometimes open source battle for the future. But that's not the whole picture. The real turning point is understanding the ultimate goal. A leading AI expert says the aim is to teach models to understand the world through sight and sound, much like a baby does. In his words, we use AI to generate content to then train another model to perform better. This process, called a synthetic data flywheel, is the core of their plan. Essentially, you have an AI creating massive amounts of new artificial video content. Then you use that video to train the next generation of AI, making it smarter and faster. It's a self-improving loop. But this flywheel comes with an enormous risk that experts are worried about. It's called model collapse. If an AI is only trained on data made by another AI, it can start to inherit and amplify tiny flaws. Over time, the model can become detached from reality, like a copy of a copy of a copy, degrading in quality and reliability. They are building a reality simulator to help AI reason more like humans. This all begs the question, what's the real end game here? It's not just about viral videos. It's about funding the race to artificial general intelligence. And OpenAI is all in committing to a staggering $850 billion in future spending on infrastructure and next-gen models. So what are the real-world consequences? When the cost of producing studio-quality video collapses to near zero, what happens to entire industries? Think about Hollywood, advertising agencies, and the entire creator economy. Research from Forrester suggests that while creative jobs like writing might be safe for now, automation could replace a significant percentage of other roles in advertising by 2030. This democratizes content creation for sure, but it also threatens to upend the economic models that have supported creative professionals for decades. The race to AGI isn't just a technical challenge, it's a force that's set to reshape our entire economy. Speaking of high-stakes competition, Sony just learned a very expensive lesson about trying to break into a saturated market. A game it developed, Concord, had a failure so disastrous it was taken offline only 2 weeks after its release. That bombshell is at the center of a massive strategy shift inside PlayStation. For years, the company has been chasing the live service multiplayer market, launching development on 12 online titles to compete with giants like Fortnite and Call of Duty. The situation presents a fascinating duality. On one side, the allure of the live service market, while on the other, it exposes the brutal reality of its saturation. Research from Ampere Analysis shows that the top multiplayer games capture the vast majority of all player time and spending. For a new game like Concord to break in, it doesn't just need to be good, it needs to be an earth-shattering phenomenon to pull players away from their established favourites. It's an uphill battle that most new titles lose. In a rare corporate admission, Sony confessed the strategy is not entirely going smoothly. The fallout is staggering. PlayStation has now officially cancelled multiplayer projects based on two of its most popular series, God of War and The Last of Us. So, what's the new plan? A full-scale retreat to what made them famous in the first place. The company is now doubling down on the big-budget, single-player blockbusters that defined its success. Their first big move is the new title Ghost of Yōtei, a follow-up to the hit Ghost of Tsushima. These aren't small undertakings. The credits for the last game contained about 1,800 names, with hundreds of employees working in coordination like a massive orchestra. And the scale of these productions is just mind-boggling. Back in the mid-1990s, a top-tier game might have had a team of 50 developers and cost a few $1 million. Fast forward to today, and development costs for a game like this can soar past $200 million, with teams of over 500 developers working for 5 to 7 years. We're talking about a logistical and financial scale that is pushing the entire AAA industry to its absolute limits. This new game follows a female warrior named Atsu, a choice developers said was key to telling a story of an underdog defying society's expectations. Now, a choice like this in today's online climate is also a calculated business decision. Major publishers like Sony are now formally treating organised online backlash as a serious business risk. They are developing internal social media policies and PR strategies to manage these targeted outrage campaigns, trying to find that difficult balance between protecting their creative freedom and avoiding a manufactured controversy that could hurt sales. After a public and costly detour into the multiplayer gold rush, PlayStation is slamming the brakes. With the release of Ghost of Yōtei, the company is making a clear statement. It's betting its future not on chasing trends, but on the massive cinematic single-player epics that built its empire. Sony is betting hundreds of millions on a single game, but that's pocket change compared to the money flooding into AI. In fact, Amazon founder Jeff Bezos just dropped a bombshell on the entire AI gold rush, calling it an industrial bubble. A while back, we walked through the massive build now profit later dynamic in AI, the compute crunch and the scramble for chips. What Bezos is saying lands squarely on that same fault line. Speaking at Italian Tech Week, Bezos declared that the current hype has stock prices disconnected from the fundamentals. He says investors are so excited they have a hard time distinguishing between the good ideas and the bad ideas, adding, that's also probably happening today. His choice of words, industrial bubble, is deliberate, and it's a critical distinction. He's separating this from a purely financial bubble, like the dot-com crash. During that era, companies with no profits and sometimes no product got insane valuations based on hype, but he argues the AI boom is different. Much of the investment is going into tangible industrial scale assets. We're talking massive data centers and, most importantly, GPUs. The expected price to earnings ratio for top AI companies is around 30 times. Now that's high, but it's nowhere near the crazy multiples of 2000, suggesting the current boom is built on a more solid foundation. His proof? Bezos points to what he calls very unusual behavior, like a tiny 6-person company receiving billions in funding. He made it clear that this kind of activity is happening right now, and he's not exaggerating. A perfect example is a company called Mistral AI. Founded in April 2023, it raised a staggering $113 million within its first month with just a handful of employees. By June of 2024, its valuation had skyrocketed to $6 billion. This kind of move completely upends the traditional venture capital playbook, where that kind of money is usually reserved for companies with a proven product and real revenue. It shows just how much capital is being poured into a few very young research teams. But here's where it gets interesting. Bezos argues that this kind of industrial bubble isn't just bad, it can actually be good. He draws a direct parallel to the biotech bubble of the 1990s. While many companies went bust, the frenzy ultimately produced life-saving drugs that benefited everyone. As we've discussed before, the current AI frenzy is global and physical, from US supercomputers to China's massive pivots. Alibaba's shift to AI is a case in point, showing how this bubble is building real-world capacity across continents. And that biotech parallel is more accurate than you might think. In the early 1990s, the Nasdaq Biotech Index crashed hard, wiping out billions. But the frenzy of investment, even the dumb money funded foundational research that later gave us incredible medical breakthroughs, Bezos is arguing the same thing is happening now, a messy, chaotic, but ultimately productive investment cycle that will fuel future innovation. He's not the only one sounding the alarm on the current hype. OpenAI CEO Sam Altman has reportedly said the AI market is in a bubble. The CEO of Goldman Sachs, David Solomon, also just warned that for the market, there will be a reset. There will be a check at some point. There will be a drawdown. The core conflict is clear. A short-term frenzy of cash versus a long-term technological revolution. But for Bezos, even with a bubble, the final outcome is certain. His final word on the matter is unambiguous. This is real, and the benefits to society from AI are going to be gigantic. That bubble Jeff Bezos was talking about, it's fueling a revolution in a sector you might not expect. National defense. Let's start with a single statistic that might just change your entire perspective on this industry. In just the first half of 2025, venture capitalists poured a staggering $38 billion into a new breed of American defense companies. That number is on pace to shatter previous records, signaling a massive power shift in national security. To understand the global stakes, you have to look at the different strategies at play. We're seeing the United States betting on this venture capital model for rapid innovation, while at the same time, China is taking a completely different path with its military-civil fusion strategy. Meanwhile, the European Union is focusing on sovereign AI, building its own capabilities within a very strict ethical framework. It's a three-way race with three very different approaches. These aren't your grandfather's defense contractors. A wave of Silicon Valley startups, dubbed Neoprimes, are now directly challenging giants like Lockheed Martin, Boeing, and RTX. At the front of the pack is Anduril Industries, a company that just saw its valuation rocket to $30.5 billion. What really sets these Neoprimes apart is their business model. Unlike the legacy giants who often build to government specs on cost-plus contracts, these startups self-fund their own R&D. They anticipate the military's future needs and show up with a finished product. This allows them to move faster and potentially set their own prices. In response, the old guard isn't standing still, spending over $63 million on lobbying in 2024 alone to leverage their deep-rooted relationships. So what's driving this gold rush? According to Ernestine Fumack of investment syndicate Milvet Angels, the entire nature of conflict has changed. She says the battlefield is changing and new technologies are needed. Warfare no longer being limited to land, sea, air. There's also cyber and space domains that have become contested. And backing these Neoprimes is a new coalition called the New Guard. It's a syndicate of roughly 250 members, including tech founders, Wall Street financiers, intelligence officials, and even former Navy SEALs, all investing in companies building the next generation of defense technology. This isn't just about building traditional weapons. These startups are software first, focusing on AI, autonomy, and space tech to close what the Department of Defense calls critical technology gaps. So what does software first actually mean on the battlefield? Imagine this. Angel's Lattice OS is an AI platform that pulls data from a huge network of sensors, drones, cameras, satellites, and fuses it all into a single real-time 3D map. The I helps identify threats, dramatically reducing false alarms and the cognitive load on a human operator. For a commander, this means seeing everything at once and making faster decisions. It's a complete revolution from the older, more siloed command and control systems. This all leads to huge ethical questions, and these companies know it. Unlike Google, which famously withdrew from the military's Project Maven after employee protests, companies like Palantir and Anduril are leaning in. Their answer is to actively embed ethical rules directly into their software. For example, their platforms can include automated checks for collateral damage concerns and tools to ensure compliance with international law, trying to keep a human in the loop and prevent a powerful AI's unintended offensive use. While AI is creating a new class of defense tech jobs, it's simultaneously closing the door on another generation. A top economist just went on the record declaring the United States has become no country for young grads. For the first time in modern history, a new report finds the bachelor's degree is failing on its fundamental promise of access to white-collar jobs. And this isn't just a US problem. We're seeing a phenomenon called degree inflation in other developed economies too. Countries like South Korea and the United Kingdom are also struggling with an oversupply of graduates, which devalues the degree and makes it harder to stand out. The unemployment rate for new graduates and others trying to break into the workforce has hit a 9-year peak, and their share of the total unemployed population has spiked to its highest percentage in decades. The numbers are a bombshell. Federal Reserve Chair Jerome Powell has acknowledged young people are facing a brutal, low-hiring environment. But this is where the situation takes a more complex turn. Researchers are calling it ghost jobs. A survey of hiring managers revealed that 43% admitted to posting job openings just to give the impression that their company is growing with no immediate plan to fill the role. Essentially, companies are creating fake demand, which wastes applicants' time and makes the market feel even more impossible. The gap in unemployment between young adults with bachelor's degrees and those with just high school diplomas is now the smallest it has been since the early 2000s. This isn't just a tough market, it's a structural shift. Two major forces are at play. First, the tech industry, once a reliable path for new talent, has slammed the door shut. Entry-level hiring at large tech companies has plunged more than 50% since 2019. The reason this is happening isn't just about budget cuts. Tech companies are betting that AI tools can permanently eliminate the need for a large junior workforce. A recent GitHub study, for instance, found that developers using an AI tool called Copilot completed their coding tasks 55% faster. When your existing team becomes that much more productive, you simply don't need to hire as many junior employees to do the basic work. Second, the rise of artificial intelligence is creating an employment crisis for the young. A bombshell Stanford study found that since 2022, jobs for workers aged 22 to 25, most exposed to AI, have seen a staggering 13% decline in employment. Believe it or not, this is a new kind of skills mismatch hitting cognitive work, and even supposedly safe STEM degrees are now misaligned with the market. For example, recent data from the Federal Reserve shows computer engineering graduates are facing a 7.5% unemployment rate. Physics majors are at 7.8%. This is what a structural shift looks like. The fallout is a generation in limbo. Graduates with degrees from top universities are sending out hundreds of applications only to end up back in their parents' homes, describing a full-time job of just applying for jobs. For millions of young Americans, the once reliable path from campus to career has become a dead end.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.